Hey guys, welcome back to another episode here on Frank's Trades. In the light of the trade tension between US and China, I've decided to make a video on a good and cheap dividend stock for those who don't have the capital to be buying many shares of expensive stocks like me when I started out. Because we can never tell where the market's going, especially now with the most recent news about China tariffs and US tariffs, I think it's important to look for things that we can put our money into and rely on for the constant and guaranteed payment of dividends. And I'm going to talk about a few in just a second right after this. Before I get started into naming any stocks, I just want to clarify that when I say cheap, I mean the price is under $50 a share. So we're not paying for a Microsoft or a Lockheed Martin. I'm telling you, and I'm not telling anyone to buy anything. I'm just giving suggestions on stocks that I think provide value now and in the future. And I'm looking for higher dividend yields, not high dividend amounts like $2 every quarter, because those require lots of capital. I'm talking about good yields on cheaper stocks for more return on your money. So with that said, let's take a look at our first stock choice. First stock is Intel, INTC. Intel works in networking, communication, and a lot of other things. Most of you probably know Intel from their core processor chips in PCs and laptops, and here they're listed under the semiconductors and related devices, but looking at some fundamentals, EPS or earnings per share is at $4.58. Net income is at $21 billion. And those fundamentals haven't changed from when the stock price was up here, $58, $59 a share range. And they've got a quarterly dividend of 32 cents a share, with a yield of 2.8%. Year to date, they're down 4%, which is about a $1.90 difference. Just a few weeks ago, the stock was higher year over year. But thanks to Twitter, comments go viral just like that and stocks go tumbling. I don't know whether to thank Trump or to be angry at him, honestly, because every time he sent the market down, we picked up shares and rode the prices back up to normal levels. I also have a joke with some friends that he's actually manipulating the market so he can get in when people panic and then go, oh, just kidding, to bring us back up. That's actually what happened this summer back in May, if you guys follow my channel or the news, but let's get back on track. So yeah, Intel is a good solid pick, not a high yield, but they've got a lot going for them long term, I think. Even though Silicon Valley chip stocks were hit after the president told them to find businesses elsewhere than China. Also, analysts give it a hold for the past 6 months, with some sell ratings, but a lot of buy too. Number 4, Occidental Petroleum, or OXY. They work in acquiring land and capital to extract oil and natural gas. That's a very basic explanation of what they do, but you just need to get the gist. So the numbers here are a little more questionable than Intel. EPS is not bad though, 5.01, but a net income of $4 billion. Intel's is $21 billion. And analysts give it mostly a hold rating, and it's down 46% year to date. So bad performance, but we haven't even looked at the dividend yet. With a yield of 7.36%, Occidental pays 78 cents per quarter. There's some insider action going on right now, and it seems that people are going in on the stock, but I'm not sure how well that will improve the price. So yeah, I had to throw a riskier one in there for the curious investor. Number 3, Blackstone Mortgage Trust, or BXMT. A little cheaper than the first two and a decent number for its price. With a net income of $285 million and an EPS of $2.65, this company is up nearly 3% year to date. So it is the best performer so far. Analysts give it a perfect hold rating, with 0 sell ratings for the past 6 months. Many holds and a few buys. I like this stock a lot because of this and their dividend. Obviously, a 7.13% dividend yield, or 62 cents per quarter. And look at this stock really behaving well on the 200-day MA. 3 bounce offs right there. I could definitely see myself picking up some shares of this at some point. Number 2, Hospitality Properties Trust, or HPT. Getting a little cheaper, this real estate investment trust makes a net income of $185 million, EPS of 3.69. Analysts gave it a buy for the past 90 days. So their price target is set at 19% higher than the current price that it is now, which would be a price of $28.50 a share. It says it right there. I didn't do the math. There's no way I could do quick math like that in my head. So let's look at the dividend here. A yield of 9.05% or 54 cents per quarter. HPT just had a bad week and they're also down 17% for the year. So seeing these buy signals should send a message that maybe we should consider this great dividend stock. 9% is an amazing yield on a $20 stock. And to put in perspective, the stock is down 8% in the past 3 months. Now that seems like a lot, but really it's $2.22. And with the dividends, the past 2 quarters, you'd only be down half that. So you still wouldn't be winning, but if you buy at a low level like this we have here, I think you're looking at some positive returns. A 54-cent dividend, 9% yield rate. Investors like this one, and even Zacks gives it a hold. So before I go on to this next stock, I'd like to ask you to comment any suggestions you have for future videos, or tell me what I should work on, or really any question if you have one. I want to know how I'm doing, and I want you guys to like this, but if you have any suggestions, I'm all ears. We're all here to improve together, so whatever critique or suggestion you have, I will definitely listen and consider it. But okay, moving on to my number 1. I like this pick a lot, and I think it's the ultimate choice for a person like me who still doesn't have an immense amount of capital to invest in expensive stocks with good yields. So here's another real estate investment trust that is surprisingly cheap and not too popular on mainstream business news. It's called Whitestone, or WSR, trading at $12 a share. You're looking at a dividend machine. An EPS of 1.16, net income of 21 million. This stock is down 82 cents year to date. So the stock really doesn't move, and this is what I liked about Sunoco, which I didn't mention in this video because I just did a stock of the week about it, but that has a crazy nice dividend for its price too. But anyways, analysts give Whitestone a perfect buy rating for the last 6 months and only 1 sell rating, 180 days ago. With a 12% upside, this company has a yield of a whopping 9.18%. So a stock that hardly moves as in low volatility in this highly volatile market. A perfect buy rating for the past 6 months and a 9% dividend yield. And what's really unique about this stock is that it pays every month. 10 cents in fact. And if you bought at the lowest part here on the graph, you would be up 91 cents. 94 cents it says here. With 1, 2, 3, 4, 5 payments totaling 50 cents with your gains. So you might not think that's too impressive, but when you pick money, or when you put money into a stock like this, you can own more shares and get a guaranteed payment every month. And 50 cents alone can go a long way when the price is cheap. Every report they've beaten earnings while the price has slowly increased since March. I just really like this stock. I really like the idea of getting paid monthly too. So this one obviously is my favorite stock to buy of the 5, and I hope you guys can agree. But that is it for today. This video is probably a little longer than normal, but I wanted to show you guys another side to the trading / investing game, especially when the market is as crazy as it is now, and not just our market or China's, but others like Argentina too. They just had a serious crash after election results, and they plummeted like 50%. That's crazy. Like, it's equivalent to the recession back in '08 that we had in the US. But it's just really crazy. It's a crazy world, and you'll never know for sure what's going to happen. I will still trade like normal, but it's always good to be careful and have a backup plan or something. I'm sure any investor would tell you to have a backup plan or think of a way to hold your money and keep it safe when the market has a downturn like a recession or just any sort of dip in the market that we need to be concerned about. You don't necessarily need to diversify, but don't put all your eggs in one basket. Find something that works, and hopefully I can provide some skills and strategies at being successful in the market. And this dividend plan for when the market gets tough, I hope it works, and you guys can make money off it too. But thanks, guys, and I'll see you next time. Find a way to be a better trader today with Frank's Trades. Did you like that? I just made that up just now. So I'm probably going to change it. But that is the slogan for Frank's Trades right now. If you want more content, check out my Telegram channel or Discord. I'll put the link of my channel in the description. And again, thanks for watching. See you guys next time. Have a good one.